Right now, there's trillions of dollars sitting in home equity. People aren't using it. They can't take it and go to the grocery store. It's like, might as well just burn it.
Wow. Just wow.
Just burn it. Like, why have it if you're not going to use it, right?
Let's talk about what happens with a reverse mortgage.
Am I going to lose my home? The mortgages now is $1 million.
Just not knowing that they're sitting on a pot of gold
Right.
that they could put to use today.
Now, you can just take the proceeds from one home and purchase a new home with the reverse.
And basically live in style.
Yeah.
Welcome to another installment of AskElla show, and my guest today is Craig Gallegos, an old friend, as a matter of fact. We've known each other for about 10 years. That was way before Fairway, so funny enough, we ended up at the same office. Small world. We have slightly different specialties, and that's what we're going to talk about today, because Craig's specialty is reverse mortgages. And as much misconception, untruth, and flat out lies and myths that are floating out there about reverse mortgages, I felt it was fitting to bring in somebody who actually specializes in them. And we're not going to dive deep into all the intricacies and all the dirty details, but we are going to talk about the reverses, the lies, the untruths, the myths, and going to try to dispel most of them and basically tell you why a reverse mortgage could be a great solution if you are getting older. Frankly, a lot of us are, present company included. And again, it's just another good option out there that a lot of people discount or flat out write off without actually realizing that it could really be a good option as part of the overall retirement planning and overall financial well-being, again, as we all tend to age. That process, my friends, unfortunately, is irreversible. It's a one-way ticket, as I always say. Something to be said about getting older and being financially sound. So, Craig, welcome.
Thank you for having me, Ella. It's great to see you.
You're absolutely welcome. It's a pleasure.
What we'll be able to do today is, like Ella said, we're going to talk about some of the things that people, they have this preconceived notion because of something they heard years and years ago about reverse, and it's just really not the case anymore. Everyone, the first thing that happens whenever I bring up reverse to so many people, they ask, am I going to lose my home?
Right. And that is, I'm glad you're starting off with that, because that is the first thing that usually comes to the forefront.
Yes.
When you talk to somebody, it's like, but I'm not going to own the home anymore. Couldn't be further from the truth, right?
Right. And the home stays in your name. It's the deed is in your name. Everything remains with you. It's just like a normal mortgage. The simplest way to put it, it's a mortgage, but it has an optional payment. Okay. So instead of someone having that $2,000 a month payment or $3,000 a month payment that comes along with a normal 30-year mortgage, you can make that if you want. If you want to go on vacation one month, you can. That's the main thing I want to try to get across today. You can still make payments.
But you don't have to.
Right, you don't have to. But the wonderful thing about the reverse is if you make that payment, and it's a HECM, which is the home equity conversion mortgage, which is the most popular.
Yep.
It's the one that's backed by the FHA. It's every dollar that you put in will now go towards a line of credit that you can borrow from later. So a lot of people go in and they'll take money out of their home equity versus taking money out of the stock market. And I can show you 100 studies that show if you have a reverse, odds are you're going to have more money at the end, not less. People think that it erodes all of your equity. But if you think about this, if you think about, okay, if you have a $500,000 home and a $200,000 loan, what people they forget about is that home grows over time. It doesn't stay flat. There's only been a couple of times in history where the housing market has gone down.
Right.
And typically it grows at about 4%. So if you have a $500,000 home, that by the end of that year, you're up 4%. That's $20,000 that you've gained.
And that's every year.
Every year. So in 4 years, simple math, that's $80,000. So now your $500,000 home is worth $580,000. But that $200,000 loan, yes, that can grow. But that's simple math again. That's $10,000 a year on a 5% APR, 5% interest rate on a $200,000 loan. So that's $10,000. So you have this home that's growing like this, and the mortgage is growing down here.
So let's talk for a second about actually what is a reverse mortgage. so that our audience can better understand what we're talking about in the first place. And then we'll circle back to why you don't lose a house when you do a reverse mortgage, and the other benefits and the other misconceptions that we often face.
All right. Simplest explanation, like I said before, it's a mortgage that grows over time. If you never make a payment, the mortgage will grow over time. So instead of like your normal forward mortgage where you're paying that every single month and that interest is getting paid, the mortgage is getting paid, and the at the end of the day, that number is lower. Your loan gets added to every single month with that interest that is accrued.
So basically, it's a loan where you don't have to make your monthly payment like on a forward mortgage. So therefore, yes, your mortgage could potentially increase, but you do have the option of making a payment. And the reverses come in actually many different shapes and sizes. One of them being a home equity conversion mortgage. Then we have the credit lines.
Yes.
Again, I'm not a pro, Craig is. So just prompting my guess here.
Yes, there are other products that are available. We actually have reverse mortgages that go up to $4 million.
Yep.
So you could just have this beautiful home. Like if somebody moves from, let's just say they move from Wisconsin or Minnesota, and they have this beautiful home that they sold, and now they cleared $700,000. Now you come down here and you're used to that lifestyle, but you want to come to Phoenix or you want to retire somewhere. Now maybe you're not going to get that home you love for $700,000, but depending on your age, you could buy a $1.2 million home with that $700,000 and still complete the objective of not having a mortgage payment each month.
Right. So again, the misconception number one is you don't own the house at the end of a reverse mortgage.
Right.
Couldn't be further from the truth. Mm-mm. What happens when, well, first of all, let's talk about what happens with a reverse mortgage and what requirements are as far as occupancy goes, because that's, I think, is one of the first most misunderstood pieces about a reverse.
Yes, it has to be your primary residence. You have to live in it for 6 months and 1 day a year. That's the rule. And you don't have to live in it all the time. A lot of people have a second home elsewhere that they go to during the summertime here to get out of the heat. So, yeah.
All right. And what happens, let's say the older occupants of a home with a reverse mortgage, let's say they pass away. Again, nobody's forever. It's unfortunately the reality of this life. One-way ticket once again, not trying to get morbid. The heirs do have the right to sell the home or pay off the mortgage. Yes?
Yeah, they can keep the home if they want to. They will have to satisfy that mortgage. They will have to pay that off, whether it be a loan on their own or if, the deceased has life insurance, things like that, they can just pay that off and they keep the home. Or they can sell it. If you sell it, odds are it's going to be worth, let's just say that example that we had earlier, it was a $500,000 home. Now they've been in it for 10 years and now it's worth $900,000, the loan, let's say that doubles as well or triples, that's going to be, say, $600,000. So you sell your $900,000 home, you satisfy that mortgage, you pay that off for $600,000. Now the heirs have that $300,000 of equity that's left over.
Now, one of the horror stories, speaking about not owning the homes, or again, the horror stories that are really a spillover from how the reverse mortgages used to be before all of the regulations that basically stemmed forward from the 07-08 collapse and then the subsequent government regs put in place back in 2010 on multiple forums. There are, again, absolute just heartbreaking stuff about how the family got a reverse and now the home is worth less than what the balance of the loan is. Therefore, the family can't do anything about it. That no longer is really true with the reverse mortgages, or no longer is entirely true.
Well, from day one, it's always been a non-recourse loan. So if the home is worth less than the amount owed, the heirs aren't responsible for that. It's a non-recourse loan. If, just say, for example, again, you have a $900,000 home, but the mortgage is now $1 million. The heirs have the right to buy that. They have the first right of refusal to purchase that home at 5% below market value and still not have to pay that amount that was owed over the value of the home.
And that's a biggie to understand, actually, that it's not the balance of the loan that needs to be paid off. It's market value minus 5% if the balance of that reverse mortgage exceeds the market value of the home.
If they want to purchase it.
If they want to buy it
If they
back.
want to purchase it.
Correct.
If they don't want to purchase it, if they want to just let it go, then it'll be like the typical short sale that you saw back during the meltdown. That's all. And it doesn't, it's not going to affect the heirs. It's not going to affect the family. If it's in trust, it doesn't affect that.
Good to know.
Yeah.
So some of the other misconceptions about the reverse mortgage. Let's talk about the age.
Well, you have to be, for a HECM, for the home equity conversion, you have to be 62 or older. Why don't we circle back a minute to where people, I want to address one thing where people look at and they think, oh my God, I'm going to lose the home. And what happened to those people? Those headlines from years and years ago, there's only one instance where it can actually still happen. And I'll tell you, and if you have someone who's 75 years old, they purchased a home or they have a reverse, and now they marry someone after the fact.
Interesting.
They will have to, if they are not on the loan, they will have to satisfy that loan when that person leaves the home. Whether if they leave and go to an assisted living, something like that, they will have to satisfy that. So I always recommend, if you have a reverse and you get married, we need to revisit that and do a new reverse so they will be carefully taken care of when that time comes.
So one of the things that I'm asked a lot about reverses, and again, I personally don't do them. That's where I bring in the pros and refer the reverse clients out to the specialists. It does take a certain special skill there, and it's not that I'm lacking in the skill, but it's just not my cup of tea necessarily. Again, back in the day, it used to be that if one of the spouses was 62 plus, and therefore qualified for a reverse, and the other spouse was younger, it used to be that only the older spouse could go on the loan. Now, I understand that situation has changed.
Yes, they can go on a loan. The main stipulation is that you just need more equity, because the younger the person is, the more equity you need in your home to get the reverse mortgage. And that was one of the problems when back in the day, there was no qualification. There was your age and your home value, and you could get all this money out. But what they didn't do is they didn't calculate, okay, is this person going to have the money to pay their taxes? Because whether your house is fully paid off or whether your house has a normal mortgage or a reverse, what's one way, Ella, that you can lose your home? What's the main way someone can come and take your home?
Well, there are really two ways that I can think of. One is the property taxes, because those always come before the mortgage does. And the second one potentially could be actually lack of insurance. God forbid anything happens to the home damage-wise.
Yep.
And the home is not insured, basically it kind of goes up in flames.
Yeah, if you don't pay your property taxes, regardless of this, like you said, if you have a fully paid for home, if you don't pay your taxes, they're going to come and take it from you. So that is the one way. I can lose my home, yes, don't pay your property taxes.
So under the new rules, as you heard Craig say, and we'll expand on that here in a second, it's not just having the equity in the home or having a paid off home, but now everything is looked at closely in terms of, do you actually have the income coming in every month, or do you have sufficient income coming in to, while not having a mortgage payment, to still be able to cover the property taxes, the homeowner's insurance, and potentially the upkeep of the home, right?
Right. And I know you do a lot of these. It's almost like the VA loan where you have to have your residual income. You have to have a certain amount of money left over at the end of the month for us to be able to get that reverse mortgage. And like I said, years ago, they didn't have that requirement, and now they do, because the banks, FHA, they don't want your home. They just want the interest from that loan when you end up selling it. That's all.
And that actually is a whole other huge misconception, that the bank just wants my home and therefore they will just slap a reverse on it, and then when I'm gone, we'll take the house away from me and the family. Couldn't be further from the truth, because
That's
it's
correct. That is
FHA
correct.
insured. So the government doesn't want your home. It's basically government insured. It's our taxes that insure it at the end of the day. So the government doesn't need your,
No, they don't want your home. The bank doesn't want your home. Each year, the reverse borrower pays mortgage insurance. Okay, so even if the bank's always going to be covered, they don't want your home. They just want that interest when you sell.
And that's actually true for any type of mortgage. The banks literally just want your freaking interest.
Yes.
They don't want your home. They don't want to take your home. The foreclosure process is costly as all get up. Mm-hmm. I mean, we're talking here tens of thousands of dollars to foreclose a property in the majority of the states. So instead of going through that process, they just want the freaking interest.
Right. Yeah.
What other misconceptions do people typically throw at you? Because I know I've got a few, but I want to hear what you're seeing, what you're hearing out there on the street.
Yeah. The main one is always, will I lose my home? How is my wife or my husband? How are they going to be taken care of? Do they have to worry about it? And like we addressed before, if they're married, as long as they're married, when they do the loan, or if they're both on a loan, they don't even have to be married. A mother and a daughter can get a reverse mortgage. They don't have to be married.
See, I didn't know that.
They just have to be on the mortgage. So I've had that come up several times. My daughter lives with me. She's actually paying rent. I want to take care of her when I'm gone. Reverse mortgage, she'll never have to make a mortgage payment for the rest of her life.
That's an awesome solution.
Yeah.
Now, something too that I know I throw people for a loop when I bring it up in conversation, happens actually more often with real estate professionals than the regular consumer. But even with the consumers, it's also always a shocking or shock reaction rather, that you can actually use a reverse mortgage for a purchase.
Yes, and I know a lot of realtors that don't even know that, and it's been around for going on 16 years now. So before, you had to, if you wanted to purchase a home, you'd have to purchase it and then do a refinance for the reverse. Now, you can just take the proceeds from one home and purchase a new home with the reverse. So that saves a lot of people. Like I said earlier, if you have this home, years ago, people were able to move down here and retire here for $200,000 or $300,000 for a purchase price.
God, we miss those days.
Now you can't. I mean, after COVID and the prices and everything's up literally 50% in the last 5 years, you can't do that. So you're not going to come down here and find your dream home where you want to spend your golden years for $400,000 anymore. But
Said but true.
But for $400,000, depending on your age, you can buy a $700,000 home, retire in that, like I said, and still never have a mortgage payment.
And basically live in style.
Yeah.
Who's an ideal candidate for the reverse mortgage? Because again, I've heard the whole gamut. And one of the biggest obstacles I hear other reverse mortgage loan officers bring up is that the family oftentimes intervenes in the older borrower's decision to get a reverse mortgage. Again, mostly because of the misconceptions that we've addressed. There are more, but we're focusing on the main ones. But who's an ideal candidate? Let's talk about that, because there are a lot of people who may benefit from it and just frankly don't know.
Yeah. For me, it's anyone over 62. Anyone over 62, when I turn 62, I will have a reverse mortgage, and here's why. That line of credit grows over time. That if you have a line of credit, it's going to grow at 5, 6, or 7%. Guaranteed. So you can use that money down the road if you need to use extra cash to, say you want to age in place. Now you have to put a ramp in, you have to put railings in. You don't have to worry about coming up with that money out of pocket, because at the end of the day, cash flow is king in retirement. Cash flow. Because you can't take the equity in your home and go to the grocery store and buy groceries. You can't put gas in your car. You can use cash to do that. And instead of you having that mortgage payment, you can use that instead. Every time I hear it's the loan of last resort. It's for people who just don't have any money left. But it's for anyone who doesn't want to have that payment every single month. What if they want to go on vacation? Think of, if you're spending, even if it's $1,500 a month on your mortgage payment, what could you do? What kind of vacation could you take just after 3 or 4 months of not having to make that payment? $5,000, $6,000, $7,000. That's a heck of a nice vacation. If you want to take your family, if you want to take your grandkids somewhere, if you want to take them to Disneyland or Disney World, it's a lot easier to do it that way if you don't have that mortgage payment.
Now, something that also used to happen back in the day is a lot of unscrupulous people in the mortgage biz used to advise older clients to do a reverse mortgage, take the money out, and put them into some, let's say, questionable investments. From what I understand, there are now protection mechanisms against that. And the older clients also actually have to go through a full-on counseling session
they are protected.
Offered by a third party. So tell us more about that, please.
Okay, they are protected. It's basically a phone call, and it can take anywhere between 30 minutes or an hour. For all the borrowers have to be on. I can't be involved. I can't even sit there. I've been at a client's house where they were going to have their counseling, and I had to leave. The counselor's like, okay, he has to leave. So the protection is in place, and it's really education. I'll tell you a funny story. I had a borrower who, I have these books that I hand out to the clients that are wanting to learn more about reverse. So I met with this wonderful woman. Her name is Brenda, and she needed a reverse, and I gave her this book. And as Ella said, you have to go through counseling. So I said, okay, so in your pamphlet here, you're going to call this number. You're going to arrange your counseling. And I said, it can take up to an hour. She's like, okay. So I called her a week later, and I said, Brenda, have you made your counseling appointment yet? And she's like, no, I haven't. I'm like, well, why not? She said, well, you said there's a test afterward, and I've been studying the book that you gave me. And I said, oh my gosh, it's not a test. What they do is they just ask questions. They want to make sure that I haven't told you misinformation, I haven't lied to you. And they want to make sure that you know a lot of the caveats about a reverse, and they want to make sure that's true. So she's like, all right, I'll make the reservation. I'll make the time. So she called me back right after she finished, and she said, Craig, I was off the phone in 10 minutes. I knew just as much as that person did. So it was really funny. So she was so nervous about this test, but she finished it in just a couple minutes, that whole phone call, the counseling. And it's a wonderful thing. It's the only class that's protected by that. I can't even move forward with reverse. I can't order an appraisal. I can't do paperwork without them doing that counseling first. So it's a wonderful protection for them.
So really, for those who don't understand, we are part of probably one of the most regulated industries out there compared to any other financial service. I mean, yes, the barriers to entry may be a little lower than into, let's say, securities, but in general, we are very much under the microscope by the feds and the state authorities as part of the mortgage industry. Our license numbers get attached to every single loan application and piece of paper that has to do with your mortgage for years to come.
Yep.
God forbid we did something wrong. And with that level of scrutiny and with that level of regulation, do you think that we would be talking about a product that was actually not a good solution or not a good option for the aging population? I mean, how big is the growing baby boomer population right now?
Oh my
In the
gosh.
millions?
Yes, there's 10,000 people that turn 62 or older every single day. There's trillions of dollars now that are just sitting there. Yes, it's growing, but are they utilizing it? Are they using that money to have a better retirement?
And it used to be to the older population, the much older population, not the newly 62-year-olds, but the older ones, and especially that stems from the Depression era, where, you had to pay off your home. Your paid off home was your nest egg. Well, like Craig said, you can't take the equity in the home to a grocery store. You can't take it to a doctor appointment, or you can't really take it to pay for a caregiver to stay in the home. And frankly, it's a lot of times way cheaper to stay in the home and bring in the help to care for you as you get older than to go into a care facility. I mean, those start at what, $5,000 a month and up from there?
Not more, yeah.
Depending on the specialty care.
Mm-hmm.
So this is something that I've been wanting to talk about for a long time, is how misunderstood and how underutilized of a financial tool, especially for the older parents, especially for the grandparents, this may be. And while, yes, there is a wish there to leave the paid off house to the family to inherit, in the meantime, so many of the older folks are frankly struggling financially right now, especially because of the inflation, especially because of how the cost of living has frankly shot up like a rocket.
Oh, yeah.
And they're on the financial struggle bus every day while sitting on a pot of gold of equity, afraid to tap into it, or just not knowing that they're sitting on a pot of gold that they could put to use today.
Yeah, and they aren't moving forward because of the misconceptions that we've talked about. That's their main stumbling block of moving forward and using that money just to enrich their lives. You imagine if instead of paying that $1,000 or $2,000 or $3,000 a month on a mortgage, you can use that for the long-term care. You can bring people in so you can age in place versus having to go to another home. And I think we all can agree that my parents, your parents, my grandparents, they want to stay in their home as long as possible. And this will allow them to do that.
Absolutely. I mean, I've been chewing my parents' ear off about doing a reverse mortgage. And unfortunately, they're coming back at me with the same, they want me and my brother to inherit the house. It's like, I'd rather you get taken care of.
Yes.
And that's probably the biggest obstacle, I think, that we really have to get through with more of the general population.
Yes.
Just because, again, the reverses are so misunderstood, understood.
Yeah, and they're underused. There's not a lot done each year. It's amazing to me how I would think that there would be more reverses done year after year, but there isn't, and that's simply because of that stigma that is out there right now that shouldn't be in place anymore. I mean, the information is out there.
Right.
The studies are out there that show you're better off with a reverse mortgage than not.
Right. There is one more obstacle that people actually bring up. And that's, well, I don't want to do a reverse because it just frankly takes too freaking long, especially even when we do bring up a reverse for purchase. That's a response that comes up most of the time. Well, we can't really, take this long to close. Well, how is this long? Well, I don't know. Few weeks.
Well,
couldn't be further from the truth.
Yeah, the great thing is on a refinance, we're done typically in 30 days or less. And on a purchase, we can close them as fast as 17 days. So if we're ready to move forward with a buyer, they're good to go. And that's almost as fast as a cash purchase. So
exactly. So bam.
Yeah, exactly.
If you do have any questions whatsoever about the reverse mortgage, Craig's contact is going to be pinned down below, and all it takes is a phone call. And we are not allowed to charge for a consult, so it's always free. I mean, again, one of the federal regs, we just can't take your money up front. So you can ask the questions, and Craig is one of the most honest and honorable people I know, and known forever. 10 years is forever nowadays. And you can just ask and see if a reverse is the right solution for you, for your loved ones for that matter. Because again, if you have aging parents and you are not in a position to help them financially, and they're not as well off financially as you would like them to be, or even they would like themselves to be, then it's definitely time to look at the possibility of doing a reverse mortgage and benefiting them, and frankly you, because now that takes that financial burden of taking care of your parents in addition to your financial burdens off of your shoulders. So any questions?
So true.
Craig is your man. And at Fairway, we've built one of the best reverse structures and support teams that's out there.
Yes, we just in the last year, CNBC, CNN, they all voted us the best reverse mortgage company out there. The speed for of course, for the purchase as well as the refinances. So it's wonderful working here. I've been here for 8 years now, and it's lovely. It's a lovely company, and we are here for you. We are here to serve you.
And that's what we do. Now, leave us a comment, ask your questions. See you on the next one.
Bye-bye.